morning, everybody. Thank you for joining us today. We are here in the third episode of Borak Bersama Maybank. We have a great topic today. We are discussing about gold, something that pretty much everybody have some interest on. I think my wife definitely. I'm sure she wants to watch this video. So before we go on, I would like to introduce our presenter today. We have Tareck Horchani, our Maybank Investment Singapore Prime Brokerage Head of Dealing. Thank you, Tareck, for joining us.
So, thank you for inviting me.
Yeah, thanks a lot for this. We chose this topic as we know gold prices has gone up quite substantially. I mean, it's had a pop with the recent, recently. So with precious metals like gold and silver often seen as a hedge against inflation, so I think it's quite timely that we can probably discuss this at length. So again, recently the market has seen some shocks from the whole SBV and Credit Suisse issue. As a result, that I think not just cryptocurrencies, but also gold saw a strong push in prices. Tareck, can you just go through and tell us the reasons that could have caused gold prices to surge?
No, you mentioned it, and you're totally right. There's been a lot of concerns regarding the banking sector in the US and in Europe, which is triggering a strong interest from investors to buy gold. Also, the market now is pricing 90% that the Fed will stay on hold in May, which is a big change in rhetoric, where we thought that the Fed could hike another 50 basis points quite fast, but now the market is pricing the other way around, that they will go on hold. And this should also provide some support for gold. And to be honest with you, there's not many investment at this junction that is outperforming the market. You have all seen that equity market has been quite volatile. So gold has been a great way for managers, investment managers and hedge funds, and also retail to diversify their risk. Overall, precious metals are benefiting also from collapsing yield and a steepening yield curve. So the 10-year yield, the treasury yield has moved down from 4% to 3.5%, and the 2 years from 5% to 3.9%. And that's what I was telling you about the Fed probably going to be on hold in the next meeting.
Okay, great. So, I mean, well, technically, in a nutshell, we are saying that because of the risk averseness of the markets, people are just very interested in buying into, gold. So, okay, great. I just want to, just pivot back to your comment on the charts. So let's look at where it is heading via technicals, where and how the charts are looking for right now with regards to gold prices.
Yes. So this is the chart of gold, and it's very important for investors when they look at gold to also understand what the Fed is doing. So if you look at here at the start from June to November of last year, the Fed had very strong rhetoric that they had to hike rates very aggressively. So there is a strong inverse correlation between gold and interest rate, and that's why you see that gold stayed within this channel, don't turn channel up to November. But from November, the market rhetoric changed a bit. People were starting to talk about hard landing and also uncontrollable inflation, but also recession. And the word recession really means that the gold price will go higher. So we broke here in November, and then we went to all this upward channel. From February this year, the Fed has been changing also again its rhetoric, saying that they still need to continue to raise rates. But then from March, SVB happened, Credit Suisse. So this is the first time actually that I'm seeing high correlation between gold and overall market sentiment and risk-off sentiment. Because before, the gold price was moving with interest rates. Since March, the gold price is moving with the risk-off environment. So we rallied from 1810 to 2000. If you look in a more broader basis, 2000 to 2050 for me is a strong resistance. So I think we'll probably have a small pause here, and the market will want to see what will happen with the Fed meeting in May, and also what will happen with the banks, because actually the deals between UBS and Credit Suisse is not completely done yet. The problems with the regional banks are not completely done yet. So it's important to watch this level, and there will probably be a lot of buyers if we start to break this 2000 level. The short-term traders will want to sell at 2000, probably aim for the next support, which is at 1910, probably the 50% retracement, or the 38% retracement first at 1860, and then the big support for me is back to 1810. But so there might be some short-term sellers here, but I expect to see some buying interest at 1910 and 1860.
Quick recap: 1860 bottom and top at 2000. And again, coming back in May, if we break that, potentially we'll probably be at recent highs then. Because I know it hit higher, I think probably last year, right?
That's correct. So
Yeah,
it broke 2000 around 2070 in last year. So it's possible we go back there. It's possible also that the move will accelerate if we break the 2000 level. Because as you can see here in my graph, there's been a few times that we have been trying to break with no success. There is the support level here now is becoming a resistance level. So if we start to break this line, we should accelerate higher and go much higher. Because it will mean that something is happening in the market, either it's risk off, or the Fed is starting to cut rates, or is really talking about cutting rates. So then there will be a demand for gold.
You can get the latest market news and research from our Telegram channel, Trade with Maybank, or you can reach out to your respective sales representative, and as well as the digital sales channels. If you like the content that we've been showcasing for you today, please subscribe to our channels, i.e. LinkedIn, YouTube, as well, again, via Telegram, and we'll see you all in the next session. So again, everybody, thank you very much. Trade smart, stay safe. Till then, it's Naguib signing off. Thank you, everyone.
Do 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 do.